In October 2023, the Israel-Hamas war broke out. Bitcoin bottomed and surged by 300% over the next year. In September 2020, a major conflict erupted in the Eurasia region. Bitcoin bottomed and climbed 500% in the following year. In May 2017, the Battle of Marawi unfolded in the Philippines. Bitcoin bottomed soon after and rallied 550% within a year. And again in April 2015, a major fight broke out in West Africa. Bitcoin bottomed and gained 250% over the next year. But in February 2022, Russia invaded Ukraine and Bitcoin ended up falling by 70% in the 6 months that followed. So what's the difference? Why do some geopolitical conflicts lead to catastrophic declines while some lead to incredible rallies? As tensions are hot in the Middle East, the answer to that question is going to determine where Bitcoin goes next. We've summarized the answer to that question to one key factor, and that is the price of oil, one of the most important variables in our financial system. The last two bull market tops in Bitcoin's price, including the one that formed around the Russia-Ukraine war, were indirectly driven by a sustained rise in oil prices. This becomes clear when we bring in this dataset that tracks whether oil is trending higher or lower over time. We can see that the last two Bitcoin peaks, so here in 2018 and here in 2022, occurred right when oil prices shifted into a strong and sustained uptrend. And that's because oil influences the two most important factors for the economy: growth and inflation. First, let's look at growth. When oil prices rise sharply, they act like a hidden tax on economic growth. As households and businesses see energy costs rising, they naturally start to cut back on spending in other parts of the economy. Eventually, that creates a drag on overall growth, and we can see that through this chart showing all the major oil shocks going back to the 1970s. In almost every single instance, when oil prices spiked by more than 30% in a short period, it ended up triggering a recession, which is almost always bad news for risk assets like Bitcoin. The only exception where an oil shock didn't lead to a recession was here in 2022, but as we just covered earlier, Bitcoin still saw a big decline during this period. The other big impact of rising oil prices is on inflation. You see, as oil rises, inflation tends to pick up alongside it. And once inflation heats up, central banks are often forced to push interest rates higher to control inflation. We can see this relationship pretty clearly by looking at the price of oil against long-term government bond yields. It's not a perfect one-to-one correlation, but they do tend to move in the same general direction. For instance, heading into 2022, oil saw a 150% rally, and just a year later, government bond yields went from 1.5% to almost 5%. When yields go up, it means the cost of borrowing across the economy is rising. That pushes people to save more and spend less, an environment that's not particularly constructive for risk assets like Bitcoin. And we can see this by zooming in on this chart and replacing oil with Bitcoin. Back here in 2022, as long-term bond yields were climbing, it put downward pressure on Bitcoin's price, resulting in the 70% decline we mentioned at the beginning of this video. Once yields stabilized from 2023 onwards, then Bitcoin finally found a bottom and has been trending higher ever since. But now, if bond yields were to start rising again because of another oil shock, like we saw in 2022, that could potentially put an end to Bitcoin's current bull market. So to put it simply, through its impact on both economic growth and inflation, higher oil prices have a significant influence on Bitcoin's performance. Now let's look at what oil prices are doing today. Oil rallied by over 30% since May 2025, with the biggest intraday jump in the last 3 years happening right after Israel attacked Iran. But in the past few days, it has fallen by almost 15%, telling us that the shock to oil seems to be relatively limited. However, with the ceasefire being potentially broken, there are still risks of further damage, especially if the US were to get fully involved in the war. Because if the US were to get completely involved, it would significantly raise the chances of Iran blocking a passage called the Strait of Hormuz. This narrow stretch of water is critical for oil shipments leaving the Middle East for the global markets. Roughly 20 million barrels of oil passes through this choke point every single day, which is about 20% of the world's total daily oil supply. That makes this one of the most strategically important shipping lanes for the global economy. So if the Strait of Hormuz was closed, it would almost certainly trigger a massive oil shock. According to Forbes, such a move could send oil prices soaring as high as $200 per barrel. That would mean a surge of around 180% from where oil is currently trading. Such a big move on oil today would very likely lead to an economic downturn, which should likely be a big headwind for Bitcoin. However, the chances of the Strait of Hormuz being closed before July has just fallen to 2%. So despite there being a potential scenario where oil prices could climb much higher, there's still not enough evidence for us to turn fully bearish on Bitcoin at this stage. But we remain data dependent, and if the price of oil breaks above this downtrend resistance line around $77 and holds that breakout, that would be a clear warning for us to get more cautious on the crypto market. Because a move like that would signal that the downtrend in oil is reversing because of this conflict, and that could quickly change the backdrop for risk assets. On the other hand, if the conflict cools down in the coming weeks and the break-in ceasefire was a one-time event, then the backdrop could actually flip quite bullish for Bitcoin. Despite the conflict, Bitcoin pulled back only 10% off the highs after a 50% rally in 45 days, and is now just 5% away from all-time highs. Pullbacks after such aggressive rallies are normal, and was a likely scenario that we've highlighted in our recent crypto videos. As far as price holds above these moving averages, the broader upside momentum is still intact. So if tensions ease in the coming weeks, we'd expect Bitcoin to continue its uptrend. Our team posts all of their crypto trades on our premium trading service. Our top trader just secured a 193% profit last month, with a win rate of 80% on his trades. Many of our members are making double and even triple-digit gains following our recent trades. We provide buy and sell notifications for each and every one of our trades, along with the exact reasoning behind them. Click the link below to join our community.